Good morning, everyone. Welcome you all to the PIER Seminar. Today, we are honored to have with us a distinguished speaker whose expertise in central banking and macroeconomics. Dr. Ozer Karagedikli is a professor of practice at the Asian School of Business in Kuala Lumpur, Malaysia. He joined ASB in 2022 after 3 years with the Southeast Asian Central Bank's Research and Training or CZEN Center in Kuala Lumpur, where he was a senior economist. At the ASB, he teaches research methods, data analytics, and contemporary issues and macroeconomics. He also delivers related executive education courses, which can also be customized on demand. Prior to moving to Malaysia, he had been a central banker for 17 years. He worked as an economic advisor in research, modeling, and forecasting teams of the Reserve Bank of New Zealand or RBNZ. Ozer's research interests are in the area of macroeconomics, monetary economics, forecasting, international linkages, housing, and labor markets. His latest work includes forecast combination for asymmetric distributed variables, the effects of different types of forward guidance, housing supply and population growth, the role of job-to-job transitions and wage growth, and role of different types of credit. Okay, today, please welcome Dr. Ozer, and he will present his paper in Thai Central Bank of Reviews.
Hey, Emila, I have to hold this all the time, right? So people online can hear me. Okay, good morning, everyone. Thank you very much for having me here. It's a great pleasure to be here. Thank you. I have to warn you that this is going to be different than probably a typical research seminar or an academic seminar. This is more of a central banking piece. It is still an evolving piece, and at the same time, it really is. We do believe it's an important thing to write on, but it is really difficult to write on because the amount of information we are combining is massive. But we still think there are certain things we can learn from this, and that's what we are going to. That's what we are trying to do. The aim of the paper is really to read all these central bank framework or mandate reviews from around 20 a sample of 20 by around 10 different central banks who had some kind of review since 2001. We go and read every single one of them, and we try to learn from them, okay? What do we learn from them? Why are they doing these reviews? Are they necessary? What do we learn in terms of who reviews, what the terms of references are, what the recommendations are, and what parts of those recommendations are implemented, okay? And we also, that's something we haven't done, want to come up with something like having decided that this is a good practice, these reviews, if one can design a prototype review of central bank reviews, if you like, these kind of reviews. That's where we are going, if you like. Okay, and feel free to interrupt as we go along. And I mean, these are joint work with Asia, my colleague Hans Genberg at ASB, and Warwick McKibben and Renee McKibben, both at ANU, and Tara Sinclair. And thanks God, none of us are central bankers anymore. Although Renee is an MPC member at the Reserve Bank of Australia now, so disclaimer applies for her. Okay, the first You heard that, I used to be one of you. I was a central banker. I still feel like a central banker. I was the Reserve Bank of New Zealand for a long, long time in 2 stints, with a stint at the Bank of England in between. So I take great pride in the things that the RBNZ invented, including inflation targeting, monetary policy statements, endogenous interest rate forecasts, and so on. One of the things they really invented is this review. But having said that, they didn't invent it. The government kind of asked them. The following the Asian financial crisis, or during Asian financial crisis, there were some unhappiness about the way the Reserve Bank of New Zealand handled that shock. And the country ended up in a mild recession. And the new government in 1990, that came into power in late 99, decided to have a review. Okay. And they asked Lars Svensson, then at Princeton, to come and review the monetary policy mandate framework. I'll show you the original terms of references. This is almost 25 years ago. When you think about it, this is quite bold and unprecedented. A central bank, I used to be a central banker too. We know everything, we don't want too much scrutiny. We want to enjoy our independence and so on. Going to an external party to come and review you, and you don't know what the person is going to say. Some of the recommendations you will see were quite obvious. We kind of realized, I was a junior guy at the time, you realize, oh God, we didn't think about these things. So it is really bold and interesting. At the same time, simultaneously, Bank of Canada started doing their 5-yearly reviews, but in a different way, in conjunction with the Ministry of Finance. Okay, their reviews had 2 elements. A backward review element, reviewing the past 5 years of business cycle, okay, and whether the mandate they had, framework they had served them well. And then going forward, a renewal element. Are we going to renew what we have, or are we going to have a different kind of a framework? So these 2 central banks started at the same time, but quite different models of reviews. One, they went to an external party. The second, it was an internal review. Okay, but another interesting difference was that the Bank of Canada decided to do this internally every 5 years. Okay, whereas RBNZ one, we didn't know this was a one-off or regular or anything. Okay, we are going to see later. So since then, we have a sample of more than 20 reviews, and in fact, just a few days ago, we found out one additional review that Czech Central Bank had gone through one, so we missed that one. So more than 20 reviews that have taken place in advanced economies, with the exception of South Africa, that was reviewed by Athanasios Orphanides and Patrick Honohan. And these are the reviews that are in public domain, okay, that we know about. We are sure there are a lot of internal reviews that don't see daylight. Those observations we don't have, okay? You can't have them. Once in a while, people come and say, oh, we've done this internal review and so on, but hey, if it's not in public domain, I can't use it. Okay, so we are going to review all these 20-odd reviews, and we are going to try to examine why, how, when, by whom kind of topics. So we are going to, after discussing why and so on in terms of references, and we are going to examine some common emerging themes in these central bank reviews. And while doing that, we are going to focus on these central banks where this is the only one you might not know, Central Bank of Iceland. Okay. Hopefully, as an emerging market, a major emerging market central bank, you are going to find something interesting in this. this is the list of the central banks that had some kind of review, and we classify them. I'm going to talk in more detail on that, but we are going to classify them to a first approximation as internal or external reviews, i.e. who does the review. Then we are going to have this star kind of thing, i.e. an external review with some additional expert input, or an internal review with some additional expert input from outside. So I'm going to give you more details on that. So as I said, we'll be examining some of the emerging themes from these 20-odd reviews. So you can see some central banks, they do it regularly every 5 years. Riksbank is another one, whereas as you see, Reserve Bank of New Zealand, let me use pointer. They started in 2001. The next one they had was in 2022. And the model was quite different. They have done it internally. Then they went to 2 external experts for review of the reviews, for some input or referee report, if you like. Okay. Then when we were writing this, I found this. This is from the Central Bank of Iceland law, 2019. Every 5 years, the minister shall engage 3 impartial experts in the fields of monetary and financial economics and financial supervision to carry out an appraisal of the Central Bank of Iceland's performance in achieving its objectives, and the list goes on and on. And it in fact specifies even more detail. One of the experts shall have sound knowledge of Icelandic economy, 2 others shall have wide-ranging knowledge and experience of international financial activities and the operation of central banks outside Iceland. I.e., they are telling Central Bank of Iceland, the politicians, we don't want you to find 3 people within Iceland to come and review, because in a small country, I guess the politicians were worried that, hey, the only people you can find would be the former central bankers. So we don't want that. But it is very specific. First, it is legislated. Okay, a regular 5-yearly review is now legislated, and it is quite specific about how often it should be, by what kind of people, and also remit. Achieving its objectives on financial stability, price stability, and financial supervision. Central Bank of Iceland is not the only one. The latest Reserve Bank of New Zealand Act also specifies a 5-yearly review, but it doesn't say whether it should be done internally or externally. It leaves that one open. I guess what we are trying to say is, look, these are becoming more common, more important, and politicians, at least in 2 jurisdictions, went out of their way to put this in the legislation. So we kind of expect this to become more common, these reviews, these types of reviews, more common in around the world in central banks. Okay, so this is the outline. I'm going to talk about purpose, initiation, frequency, models of conduct, terms of references, some emerging themes under these 4 headings, but these are to a first approximation, if I may say, and then I will conclude. Can I take a question or 2? No? Yes, please. Please.
What about other emerging market economies?
South Africa is the only one that has a review. The only thing we could find in terms of the report of the review is a working paper. We don't think that is the final document that was seen by the minister or by the central bank hierarchy. It was more of a working paper evaluating the South African Reserve Bank's conduct of policy, monetary policy during COVID era, the working paper. So that's the only one we could find. You did. And that is a yeah, I look like a fool. Of course, there is no reason why we don't include. I'm so sorry. We should have done a better job on that. 2010, did you say? And is it public? Okay. Because we did quite an extensive search with ourselves and RAs and so on. But I'm so sorry. I'm in Thailand and I don't have Thailand. But one thing I heard from late Tony Atkinson. There are some labor economists. You would probably know who he was. He used to say, when you are doing cross-country analysis, never include in your sample the country in which you are presenting. So, because audience knows more than you do, you will be hammered. So, in that sense, but my apologies, but no, it wasn't just a deliberate attempt to focus on advanced economies. No, that was the only sample we could find. But thank you. This is great. Okay. So, independence. Most central banks in the advanced economies or even emerging markets, even some developing economies, have some kind of a monetary policy independence. And that comes with a lot of, or should come with a lot of accountability. Right? We all agree on that. But the accountability that we think about, or accountability/transparency, they are all on the high frequency aspect of what we are doing, i.e. the short run. We publish monetary policy statements, we give speeches, we publish annual reports, press releases, what else? We go to parliamentary committees and so on. But most of them are about the current policy, at most the most recent policy, what we are doing, what we might be doing. Very short run or high frequency aspect of what we are doing, right? So we kind of think what is missing there is a more long-term perspective on the mandate. Is it still fit for purpose? Okay, the mandate you have, framework, institutional arrangements, and all those things. And it seems that these reviews are serving a purpose, filling in that gap, that kind of a low frequency review of those topics, those issues, mandate, framework, governance, institutional arrangements, and so on. It doesn't mean we cannot do them in our what I call high frequency accountability measures during one of them, but this is probably this has become a place where these central banks are reviewing those in these as part of these reviews. Okay? It is also a good institutional practice in terms of benchmarks or looking at the frontiers where the changes are and optimal choices. The choices we made, are they still the best choices? Are they still the right or optimal choices? Kind of thing. Okay, and hopefully, you know, they go in line with what the society is willing to give us to do. You know, we learn from the past experiences, most recent experiences, any mistakes we might have made, and avenues for opening avenues for new research, addressing alternative points of view, but equally importantly, by doing these reviews in a public way, we also get public's view on that. And more reviews, even the first Swenson review, they invite public to make submissions, public make their submissions, the reviews might not respond to them, Fed listens events throughout the country. So it gives public a chance to raise their views and their concerns. So in terms of the purpose they serve, they are different than the other kinds of those short-term accountability, transparency measures that we have. Here, just, the other thing, is central bank independence. At least in the countries we have in the sample, here it is increasing. So it should come with more and more accountability measures. More independence should come. There, if I may say, emerging markets, these things, I do believe, become even more important compared to some of the advanced economies. Emerging markets use more number of policy tools. They have more number of policy tools at their disposals. I always joke, in some emerging markets, the governor or the committee might be more powerful than prime minister. We do monetary policies in some emerging market countries, like microprudential, macroprudential, FX intervention, capital flows kind of thing. And on top of that, in some of these countries, we are also the main advisor to the Minister of Finance or the Prime Minister. I mean, this is a very powerful thing. So we have a lot of power. So maybe it's even more necessary in these countries to have these reviews once in a while. Obviously you had, and I missed, and I still feel very embarrassed about that. Okay. 5 quarters and you use Thailand. Unbelievable. Okay. Initiation. Who initiates? Most of the time, it usually comes with a, what's the right word? Crisis, necessity. As I said, the Reserve Bank of New Zealand's 2001 review came from the public or the government's, the new government's dissatisfaction with the way the Reserve Bank of New Zealand handled that Asian financial crisis shock. For those of you, I don't think there is anyone who would remember that period in this audience, but I do. The Asian financial crisis was a huge demand shock for a small open economy that exports a lot to Asia, like New Zealand or Australia. And the exchange rate in both these economies were tanking following the shock. Massive decline in the exchange rate. The Reserve Bank of Australia saw that as a demand shock, and they cut interest rates that exacerbate the currency fall even further, probably. Reserve Bank of New Zealand saw this one as an inflationary thing that would stem from exchange rate depreciation. They raised interest rates substantially. And only within 4 or 5 months to realize that they made a mistake, they cut the interest rates a lot. But by then the country already went into a mildish recession. Okay. But still a recession that didn't go well with politicians, especially when your neighbor handled the shock differently. So in some countries, government, Reserve Bank of Australia review is another one. The newly elected government said, we are going to have a review. And there are reasons for that, a number of reasons. And arguably part of the reason was the way the Reserve Bank of Australia was handling the policy in the preceding 10 years, 5-10 years or so, in terms of inflation undershooting, the economy not recovering as much, and so on. Okay. And then there are some internal, often self-initiated, like the ECB or the Fed review, okay, or the reviews that are in collaboration with the Ministry of Finance, Bank of Canada, for example. Okay. Some trends, it looks like this 5-yearly thing is becoming a trend. Most and more central banks, at least in this sample, are doing it every 5 years. In 2 cases, it is legislated, as I mentioned earlier. Okay. And in some cases, there is this renewal element in the case of Canada and also recently Sweden and Australia, renewal of the framework that we have. So we are going to classify these things under 4 headings: internal with expert input or reviews, external and external with inputs. Large central banks, ECB, Fed, and Bank of Japan, they go with internal option. Probably they are large and they have complex structures and they have much greater depth in knowledge and expertise. The Federal Reserve might feel that we have the expertise, we don't need anyone from outside. Even though I would agree with that, still some external views wouldn't be a bad idea in terms of bringing some fresh ideas, fresh blood to the discussion. Okay, and smaller central banks more likely to have these reviews imposed upon them. Okay, here are is my okay. What we have based on the sample, here is the reviewer. In the case of New Zealand, there was no outside expert that Lars Svensson used. He talked to many businesses, academics, and so on. He received public submissions, but there was no one that he used. Whereas some other external review, where is it? This one, for example, RBA 23, the former Deputy Governor of Bank of Canada, Rene, are quoted in this paper, who is now an MPC member. These 3 were the reviews, but they used a number of external experts to help them with certain parts of the reviews. So from external RBNZ model to external with some expert inputs, if you like, other model. So we have similar kind of thing. Bank of Canada, where is Bank of Canada? Here, it's all internal, for example, okay? In this case, only in 2024, they had some outside experts, but their normal reviews since 2001, they don't have any external expert input. Whereas Bank of Japan, most recent review, for example, had a number of, including Taka-Ito, external experts. I keep coming to that. I'm still scarred by that. Okay. So these are just to give you some ideas about the. I'm not doing well with time. Okay, this is the terms of reference of the 2001 Svensson review in New Zealand. This is the terms of reference that Minister of Finance at the time put in front of Lars Svensson. These are the things. And by and large, with some bells and whistles, with some minor adjustments or additions, this has been rather durable. Central banks are asking similar kinds of things from their reviews. What were they? The way monetary policy is managed in pursuit of inflation target. Instruments of monetary policy and effectiveness. The information used in decision-making, including data and forecasting. Decision-making process, accountability structures, coordination of monetary policy with other policies, and communication of monetary policy with public and financial markets. Okay. Just to give you some hint, some idea about what Lars Svensson kind of said, his top 2 recommendations, most important one was getting rid of the single decision maker in favor of a committee. So Reserve Bank of New Zealand had a single decision maker, and Bank of Canada technically still does. Okay, Lars Svensson thought this was a dangerous avenue. You would have a good governor, sort of like any power, you know. If the person is a good one, you wouldn't have any problem. But if that amount of power goes to someone who's not as qualified, for example. So that was his biggest recommendation, and it took the Reserve Bank of New Zealand, or not the Reserve Bank of New Zealand, the government, New Zealand government, almost 2 decades to change that. So they didn't want to focus on that. The other thing was an accountability measure. That's something, it's still, I can't believe that we missed that. Reserve Bank of New Zealand governor, single decision maker, had a board monitoring the performance of the governor because he was a single decision maker. That board was chaired by the governor himself. So Svensson said, this makes no sense. This is wrong, utterly wrong. Change that, and that was changed. Obviously, he also made some suggestions on the model and so on. But apart from that, he argued, yeah, you didn't handle the Asian financial crisis well, but with that mistake, learn from that. Otherwise, things are top standard. Okay, so all reviews are different, but as I said, more and less they overlap around those themes. Okay, but they also have some additional stuff. This climate change considerations, RBA review had that. The ECB talks about that. The RBA review even talks about the institutional culture, the human resource policies, kind of thing. Here is an open question that some of us we talk about. Obviously not Renee, given her role with RBA now. This was the only review that Reserve Bank of Australia had. While other central banks had all those reviews, including their neighbor New Zealand, they resisted to a review for a long time. They didn't have one. Some might argue that that was the reason why the terms of references of the review went so deep. So had the Reserve Bank of Australia had more regular reviews before, then things might not have included more deeper issues like this. But at the same time, I don't think there is anything wrong with some external review of all these things. Okay, emerging themes, all those things. 4 things I talked about. One is mandate and framework. Mandate and framework, mandate is usually set out in our legislations, and if it's the mandate, it's more likely to be assessed by an external review in the sample. Frameworks for achieving and interpreting the mandate, that is often an important element of reviews that we see, and all reviews endorse some form of flexible inflation targeting of some form, and because inflation target is well understood, accepted, it acts as a nominal anchor, and so on. So on mandates and framework reviews, as I said, this is how do we achieve our mandate? How do we interpret the mandate? Is a theme that you observe in all of them. Some reviews end up with changes in the mandate. Australia and Iceland are 2 examples. Australia, from this, their legislation was from the 50s, 57 from memory, the original legislation. They still had all these things, the stability of currency, full employment, wealth and prosperity of the Australian people, to a much simpler dual mandate. The RBA was always regarded as a dual mandate central bank, but this made it much more explicit and clear. Okay. Iceland, the external experts in 2018 review, when they reviewed monetary policy options, 3 of the external experts proposed inflation targeting, while 1 backed a currency board option, but they decided to have an inflation targeting plus some attention to exchange rate developments, okay? And also more increased emphasis on financial stability. I guess what I'm saying, reviews can end up with major changes. This is one place, this is one reason why internally central bankers might be unwilling to go to an external review like this. You open yourself to something unknown probably, okay? I.e. the review comes and recommends something, the politicians might decide, wonderful, let's us change the mandate in that direction. So that that can be a double-edged sword. That's, I guess, one reason why some central banks might be unwilling to go to an external review. Reserve Bank of New Zealand is another one where the latest review resulted in returning to a single inflation mandate because in 2019 the previous government of New Zealand asked Reserve Bank of New Zealand to do dual mandate from inflation targeting. Okay, not that central bank didn't pay attention to output considerations, but in 23, following the review, they said, let's go back to a more simple single inflation objective. I guess bottom line, what I'm trying to say, the reviews can end up in some significant changes to our mandates, what our mandates are. Okay, interpretation of mandates and framework. This is what people call monetary policy strategy. You know, how do we interpret? How do we achieve it? You know, how do we express this? How flexible do we want to be? The language around it, and so on. And people usually examine alternatives. Bank of Canada was prime example of this, as well as the previous Fed review. Bank of Canada, for example, they were reviewing alternatives like price level targeting, nominal income targeting, or the Fed was looking at average inflation targeting, and they changed the strategy, okay, based on that. So the reviews can also end up with significant changes in how we interpret our mandate, the framework we design around achieving that mandate. And the previous one, the government coming and changing your mandate completely, for example, we have a fixed exchange rate policy. You never know, right? You might have something like that in my native Turkey. The government comes and says something very different. That would be, that might have some, if you like, dangers from the current good practice that we have, what we have as the good framework. But this, to me, is a very good practice, just learning from history and adjusting and adapting to the new environment. Okay, in the case of Fed, the average inflation targeting combined with that post-COVID inflation turned out to be something different, but that's probably, there is a bad luck element. Bottom line, we can have some significant changes to the way we think about framework. Some examples, Fed's mandate, dual mandate is still there, but the way it interprets it is quite different. Although this one came without a review, their 2020 review, for example, came up with this average inflation targeting. Right? Or in the case of ECB review, last review, that symmetric inflation target as opposed to target being below inflation being below 2% kind of stuff. RBA and also some clarifications as a result of their latest review. This is more on the technical side. I might skip some of these. Just reviews also go and have a look at the most recent policy settings, policy outcomes, economic outcomes, and how the policy might have handled the latest business cycle or the shocks and so on. Did they have the appropriate policy settings, for example? Was the policy set appropriately, or was the policy looking at some objective, other objective, it wasn't their mandate, for example? Were they leaning against wind, or were they not leaning against the wind? That's whole RBA review had some elements of that. Late Marvin Goodfriend and Mervyn King review of Riksbank in 2012 had those elements, the Riksbank's policy of leaning against the wind. Decision-making process. Are we adjusting to changes? Do we use the right model? Do we use the right information? And so on. So all the reviews we looked at have got this element too. Looking backward and trying to understand if the policy did the right things. Were the policy settings the right ones? And did we end up with the right outcomes, if you like? Here, although I'm a big fan of, I believe my co-authors too, we are all big fans of having external reviews. But here, having some external people, especially if you go back to this Iceland example where two of the experts will be coming from outside, you come over 1 year, how much can you learn about the dynamics of that economy, what is the right model, the right data, and so on. Here, I think that model of having externals might have some weaknesses because internal people probably know much more. And of course, internal people have got conflict of interest too. Hey, you were the ones who were giving the advice, right? You might be less willing to be critical of certain things, but still, can we find a sweetest spot in terms of external and internal things there? Okay. As I said, they try to understand systematic policy errors and they compare it to some models, some peer economies, and so on. When I was in New Zealand, at the Reserve Bank of New Zealand, we used to do these business cycle reviews, but it was done by us. We used to compare ourselves to Australia all the time. And yeah. Anyway, who would you compare yourself to here? I don't know. No. Okay, I'll be reviews of a conventional. This is some comment by when Rene presented this in New Zealand. Ben Bernanke happened to be there, and Ben Bernanke asked us if there were anything on unconventional monetary policy tools in these reviews. The Fed review and Bank of Japan review were the main ones that talked about these. And the bottom line is they say, look, all else being equal, we would like to use conventional interest rate tool, but when it is not available to us, what do? We have to use the other one. So we know they are less effective. We think they are less effective, but at a effective lower bound or zero lower bound, we have to resort them, kind of thing. I'll skip a few of these things. Data, reviews, measures of inflation, the quality of data, quality of model, how you incorporate certain things like financial frictions into these things and so on. They can also appear in these reviews. Forecasting, as always, is a part of these reviews as well, in most of the time. How well central bank forecasting was in this period compared to some private sector forecast, some in-house models, some alternative scenarios, for example. Would the outcome have been different had the policy done this, and so on. So there are a lot of interesting elements on this, and how do we communicate uncertainty? How do we communicate forecast, and so on? We are learning, for example, based on Bernanke review of Bank of England, we need to invest much more in data systems and so on. And we need to think maybe we need to move away from that fan chart thing and give one at most two alternative scenarios to highlight the uncertainty. Hey, if oil prices remain at this level as opposed to that main scenario that we have, this would be the outcome kind of thing. So Ben Bernanke argues at most two scenarios as opposed to fan chart where the uncertainty remains massive and same time after time. Okay. Yeah, as I said, scenario analysis is other thing that these reviews are including. But again, you need a lot of internal input to be able to do these things as well. You either do it with the model that the central bank uses, right? That would be the cheapest, easiest option. If you don't, you would be using some other model, then comparing with the central bank's model might become very difficult, or finding the expertise who can do that would be very difficult. Governance, I already gave some highlights of these things. This is the other theme that emerges, at least in the small central bank reviews, governance, where the biggest change was, as I said, Lars Svensson's recommendation about the single decision maker and changing the board chairperson, governor no longer being able to being the chairperson of the board. And RBA governance structure changed a lot as a result of the latest review. The governance board and the monetary policy making board are now separated. Okay, they used to be one board. Okay, clarified appointments to the board through some formal processes and selection criteria as opposed to appointed by the minister, kind of stuff. So a lot of changes can have happened. In the case of New Zealand, just because Lars Svensson recommended in 2001, but the Reserve Bank of New Zealand didn't change the single decision maker up until 2019, doesn't mean Lars Svensson's review didn't have an impact. At least Lars Svensson's review really made many of us to think. Why the thing took such a long time, the government of the time was not interested in maybe diluting their political agenda because they had a list of legislations that they want to pass. This wasn't something that they want to focus on. They had a different agenda, if you like. So that also makes our job a bit difficult in terms of when we think about evaluating these reviews. Think about that one. You would think, based on Lars Svensson's most important recommendation, New Zealand didn't incorporate that, so the Lars Svensson's review didn't have an impact. But hey, 2 decades later, things did change. So what is the horizon at which we can evaluate the effectiveness of these things? Even if they don't change the legislation mandate or framework now, they at least light a question mark in the minds of the internal people or the politicians. To me, that's a great service on its own. And some other examples here from Central Bank of Iceland, some reform on governance to avoid key person risks and so on. And also in the case of Riksbank and Financial Stability Authority in Sweden, again, that came after one of the reviews. Hey, we need to clarify the job sharing. Who does what? Because the Riksbank was raising interest rates because they thought the other agency was not doing it, or it wasn't enough, and so on. Communication. Two aspects to this. One, communicating the review itself. more and more reviews are now public. Public give their input. That's a very welcome and a good development. It's part of our democratic legitimacy. But at the same time, they also talk about reviews, talk about a better way of communicating policy, whether we communicate them in terms of interest rate forecast, whether we change the language of our monetary policy statement. I remember Lars Svensson's 2001 review, for example, asking the central bank to communicate our objective function. Tell your lambda in the loss function sense kind of thing. So there are a number of recommendations that come, a number of changes that come as a result of these reviews on communication side. Ben Bernanke's recommendation on at most 2 alternative scenario is another one, for example, in order to communicate uncertainty, as opposed to going with fan charts, do 2 alternative scenarios with your model, the most obvious ones, hopefully that gives people a good idea about what we are doing. Okay. Another one is the ECB 2021 review that went even further in terms of communications. Communicating with public, for example, was a big theme there. Hey, the declining reach of print media, maybe we shouldn't be focusing on them as much. We should be thinking about fragmented audiences. How do we think about communicating? How do we think about more direct channels of communicating with people via social media and so on? And also they were talking a lot about growing demand for more transparency from central banks, not only on monetary policy, but everything else, but mostly on monetary policy. If they talk all these, most of the reviews, they talk all these communication channels, and at times they try to make some suggestions or some kind of informal evaluations of what these things, okay? But some of these are present in some jurisdictions, but they are not present in some other jurisdictions. Some central banks publish attributed or unattributed votes of their committees, okay? Some publish them in an attributed way, some not. Some never publish them, for example. From memory, there was also something that came up at the Reserve Bank of New Zealand, even on the single decision maker, there was a informal internal committee that was advising the governor and in fact voting as well. And the Reserve Bank of New Zealand's board always saw the unattributed recommendations of that committee. But there was a suggestion at the time, I can't remember if it was from Lars Svensson as well, should we make them public or not? Should public see them? Does public have the right to see, or even the minutes of that meeting? So even though we have a single decision maker, does the public have right to see what kind of advice the governor was getting, whether the governor was going against that advice or not? The annual conferences and public engagement, this was again in the, believe it or not, in the original Svensson review, have an annual conference and talk about review, how things are going, kind of recommendation. Every year is probably too frequent, but maybe every 5 years, whenever we have a review, have a public forum about what the review has found and what the agenda is going forward and so on. Okay. I will leave 5 minutes for questions. This is what we think. This is our take. As I said at the beginning, you know, one of the colleagues from Bank of Thailand was telling me, look, it is still not clear to me where you are going with this paper. Where we are trying to, there was a very fair, good comment too. Where we are trying to go is these reviews are becoming more and more frequent. And we believe central banks are going to be doing these more often. And therefore, it might be a good idea to review these historical reviews and try to learn from them. Hey, what is a prototype review should look like? Internal, external, what should be the terms of references? What is the frequency? How do we communicate them? Who reviews them? And so on. That's one thing. Second, do these reviews have an impact? Okay. One sort of more in detail aspect of that could be that have these reviews resulted in some kind of convergence in the frameworks that we have across central banks, i.e. as a result of these reviews, we now all have committees. We now all publish interest rate forecasts. We now all do 2 alternative scenarios. We all have 2 to 3% or whatever inflation target and so on. So we already have some kind of convergence in our monetary frameworks, but have these reviews contributed to that? And it's an opportunity and opportunity for us to communicate and also explain ourselves to the public these reviews. And because it's an opportunity, so we need to think more about how to conduct a review, what to communicate, what to review, and so on. And we also argue that, look, reviews can have longevity. Again, my example of Lars Svensson's review of getting rid of single decision maker, I do believe Lars was the catalyst for the change to a committee that happened almost 2 decades later, but he started the discussions, the review that started the discussion. So that's all from me, and I've got 4 minutes. Happy to take questions, but I'll also be here this afternoon. Thank you for having me. And
Anyone have questions? Okay.
Thank you for your presentation. I would like to ask, maybe continue to his question about EM monetary policy review. What's the reason that EM central bank maybe have less interest to review monetary policy framework? Because you mentioned about double-edged sword, right? Double-edged sword that can be good and bad thing for central bank. Thank you.
I am definitely with you on that. I am definitely with you on that. You know, it can really, it's like opening a can of worm. It can really end up in an ugly place. But this is my very liberal progressive views, if you like. Politicians are the elected ones. If they want to change things, they are allowed to. They have the mandate, right? Not us. There was a time, I remember, one of the former governors of the Reserve Bank of New Zealand, he used to say, I wouldn't work under a different kind of framework. So to me, that's kind of putting pressure on the politicians. I don't think that's our job. I wouldn't want them to change the inflation targeting regime, but if they want to change it and if they have the mandate, it is their right. So I'm trying to see the both sides of the argument, sticking to democratic legitimacy or their right to do whatever they want to because they are the elected ones, but at the same time, not losing a good framework that we have.
Okay, following her question, if the central banks in the emerging markets are to conduct the review, like what can we learn from the advanced economics review, and how should the review model, differ from the advanced countries? And I also have another question. You mentioned about the Fed listened, so listening to the stakeholders, including firms and households. How useful can it be? Right. Thank you.
Those are great points. Maybe a good starting point, if we are scared about this thing ending up in an ugly equilibrium, if you like, a good start might be to have an internal review of ourselves and sharing it with public. There you don't go to some of the extremes that some external people might go, right? That's one thing. But at least that sort of gives the public and the politicians the comfort that, oh yeah, my central bank is thinking about these issues. They are open-minded, they are happy to do these things. My worry would be if we never review ourselves, there might be a time a new government with some crazy ideas, they review things in a way, things can get really, really bad. So that's, maybe we can find a happy halfway there, doing it internally, maybe without publishing it, but at least sharing with the politicians, hey, we are thinking about these things. This is not a recommendation for emerging markets, but for anything. I learned from this, we would be in favor of doing this regularly. We would be in favor of having external people who reviews. One thing I didn't talk much about it. Recently, my co-author Hans Genberg spoke to the Swedish Parliament's Select Committee that does commissions the review. Hans makes a big deal about, I agree with him, who the reviews are. Here again, if I come back to 2001 Swenson review, we picked Swenson, we in New Zealand picked Swenson, the champion of inflation targeting, to evaluate inflation targeting regime. Of course, he was going. I'm happy that he didn't. I'm happy with him. But at the same time, if you like, on the most important thing, it was almost a foregone conclusion, probably, right? Maybe because it is the best regime that we have at the time. But some might argue it was also a function of the review that we chose. So I would still have external reviews, experts who know what they are doing, who know what they are talking about, who can really ask the right questions, but they can also be very independent. They also know the limits. I mean, a few names come to my mind. Obviously, Ben Bernanke is one of them, and the Haldane, for example, another name that comes to my mind all the time. Does this answer the second part of your question? What? Oh, Fed listens. Oh, are they useful? Who finds them useful? Them or the central bank? I believe both. Even if central bank doesn't learn much from that, public knowing that they have a voice that they can raise about this important issue, to me, it's a very good thing. It would increase their confidence in their institution, in their central bank. And to me, that's a very welcome thing. And also central bank, you and I, we look at our data, equations, models, although I didn't have a single equation here. Public might see things differently, and listening to them, hearing them can also open our eyes as well. Well, they have more concern. They are more concerned about unemployment, for example. Or no, they are really concerned about high inflation because it erodes their purchasing power. We can learn from them too. Yeah, I'm definitely in favor of those things. Not only around these reviews, maybe more regularly. You had.
I guess also continuing with Nawat's question, and also in terms of like, how you mentioned like what the contribution of this paper could be. I'm sure you're still working on it as well, but I think an interesting aspect you raised is that, okay, these things will be done more regularly, right? And then also central banks will face more pressure. Our job will be harder per se. And it would be interesting to see like how we can perhaps, I don't know if you could quantify in terms of like how effective this thing is towards central banks and also towards the public in terms of like, has it had an impact on independence, right? Central, like how we perceive whether the central banks has more independence or not, or I don't know if you could kind of quantify it by looking at, I don't know, some social sort of tracker, like in terms of, I don't know, from the talk around it after it has been done. I think that would be interesting.
That's a great point. That's a great point. One thing we thought, Pim, but we haven't done it yet, not the independence, but the transparency. These things do not go into the central bank transparency indices we create, for example. If we somehow include these in those measurements, what happens to central bank transparency measures? This aspect of as whether a central bank has review or not is not part of those measures. That's something we thought. We thought about effects of these things on financial markets, for example. Not many countries have them, but even inflation compensation or long-term yields and so on. But the thing is, there are too few observations, and these information not leaked, but it is revealed bit by bit to the public. So by the time the public report is released, public usually knows most of the information anyway. We did look at it. There were no effects on financial markets, for example, or exchange rates, long-term interest rates, and so on. The other aspect of evaluation that is difficult, again, going back to my Lars Svensson example, he made the recommendation in 2001. The change happened in 2019, switching from single decision maker to the committee. Is that an outcome of Svensson review? If I use a 10-year window or 5-year window, no. If I use a 25-year window, is it an outcome of Svensson review, or someone else decided to have a go at this without knowing about Svensson review, for example? So those kind of things. In terms of paper, I mean, this is not a typical academic paper. It's going to be impossible to publish this, but we learn a lot from it, and we are happy to share our knowledge. And we think, you know, there is an opportunity of publishing as a report in a research institute as one of the something report. Geneva report kind of thing. So we will be happy with that. But in terms of sort of narrowing it down to a publication, it really is difficult. As I said, the narrowest thing we thought was, but central bank independence is another one. Thanks for the suggestion. Whether this thing, if we include them, would have had a role in the central bank transparency, or should we think about including these in creating central bank transparencies, hey, or their governance, good governance in the index, for example, because this is good governance, if you like, some regular evaluation. I'm not sure if I was able to answer you.
Okay. Thank you, Professor Ozer, and thank you everyone for joining the PIER seminar. However, if you have any further questions, you can please feel free to stay and ask him after the presentation. Thank you.